Thank you all for being here. Thank you to our friends at GLG for hosting us. In particular, thank you for positioning us right before cocktails. That always works out well. So Rob, again, thank you. I'm privileged to serve as chairman of the Wall Street Blockchain Alliance. I come out of financial services and financial technology. I am not a lawyer by training. I just have an unhealthy amount of lawyers in my life. But that being said, let me give our panelists the opportunity to introduce themselves. Erica, why don't we start with you?
So thank you. I'm Erica Stanford. I wrote a book about crypto scams called Crypto Wars. I work at a law firm, CMS, international law firm. I co-lead a big crypto team. We've got, I think, 10 full-time crypto lawyers and work with, I think, 350 crypto companies. And I'm not a lawyer. So I'm the odd one out, but also spend a lot of time with lawyers. So thank you for having me here.
Thank you. Tara, go ahead.
I'm Tara Annison. I'm also not a lawyer. It feels almost like being an Alcoholics Anonymous. So I work for a crypto staking firm, an institutional staking firm called TwinStake. Prior to that, spent around 4 years in the world of crypto compliance. So I spend a lot of my time chasing the bad guys, looking into emerging crypto crime threats.
Hello. Unfortunately, I'm a lawyer. What I do, I mostly help clients to investigate cybercrime, to ensure compliance, and when we deal with crypto, likely people call me because they have a drama. Either they did something wrong, or something bad happened, or someone has hacked them. So I usually intervene as a firefighter, and recently my daughter asked me, "Daddy, you said that you're a firefighter?" And I said, "Yeah, that's true, I'm kind of a legal firefighter." And they say, "Oh, I'm so happy that you're not a lawyer."
I'm Suzanne Morsfield, and also not a lawyer. I am the policy advisor for a trade association called Crypto UK. And you hear my American accent, but I've lived here for over a decade, and I felt like I needed to explain that for some reason. So.
That lawyer joke got more traction than I anticipated, so thank you, panelists. Erica, let me start with you. Let's level set for the audience. Every business vertical has its own series of challenges, has its own series of risks and threats. If we're going to talk about crises for or in crypto businesses, what particular types of threats or challenges are we talking about? Are they technical? Are they operational? Dare I say reputational? And how do we prioritize some of those risks?
Right, so conscious we've only got 47 minutes to talk about all of the problems that can occur in crypto. So the main problems aren't technical. There have been some technical issues in crypto, no one will dispute that, but by far the vast majority of the problems are human. So there's two sort of main problems. One is hacks. So you've got groups like the North Korean Lazarus group. They've become famous, mostly for being really good at hacking and for getting away with stealing billions of dollars in some of the world's biggest hacks. Phenomenally good hackers. There's others, but they notoriously target crypto companies over other companies because crypto companies have really bad security, and that's a generalization. There's some that doesn't apply to you, but overall, partly because of regulation, partly because of laziness, partly because of potentially arrogance, crypto companies are really bad at implementing all of the security that they could implement. And there's not really an excuse. There's some really, really good cybersecurity solutions. There's some really, really good penetration testers. There's some really good ethical hackers. And in some cases, actual hackers who've been arrested and re-educated by the FBI or UK law enforcement, who are phenomenally good, and they can go into companies, find all of the weaknesses, all of the vulnerabilities, patch them up and stop the risks. But crypto companies, unlike some other companies, aren't doing everything that they possibly can. So I think the first main risk is that crypto companies don't do what they can to stop hackers, and then a lot of money is stolen in hacks. But the other main issue is a social engineering one. And there's a lot of the scams and the problems facing crypto. These aren't exclusively crypto problems. They happen a lot with fiat money. The sort of the caveat with crypto crime and crypto scams is why a lot of them succeed in crypto is it's easier to send crypto without questions. If you send money via a bank, sometimes the bank might ask questions. If you send money from one to another on a especially decentralized crypto exchange, there's no real sort of barriers stopping you. So criminals take advantage of that in persuading or conning victims to send money or using phishing links to send money. So there's a misperception that crypto can't be traced and crypto is totally anonymous and that a lot of crime happens because crypto is totally anonymous. I think that's sort of blown now. In early days of crypto crime, it really was believed that you could just buy drugs anonymously and that nobody would see it. And lots of people are now being arrested because it's less anonymous than people thought. But there aren't the same level of barriers stopping. If Tara wants to con me out of crypto and I decide to send crypto to her, there's not really anything stopping me. And if then Tara decides to move that into an offline wallet or into if she's based in certain jurisdictions where we can't really go after them, there's not really a lot that can be done. So there's not really much stopping Tara from keeping hold of my crypto once she's stolen it. Sorry to...
Erica, let me push on that. Let me push on that a little bit. And Tara, I'd like to pull you into this part of the conversation. You said something interesting, and I want to push on that a little bit. Is it I'm just going to say the arrogance of the tech bros, or is it oh goodness, we've got to build fast go-to market that has increased that kind of risk or exposure?
All of those. I think all of those. I mean, we act for literally hundreds of crypto companies, and get approached by a lot more who we sometimes choose not to act for. And we've seen everything. There's sometimes it's just don't have the money. Sometimes it's time. Sometimes it's they comply with all the regulation. And one of the big problems, I would argue, is that the regulation isn't clear enough and isn't good enough. And there's no minimum standards for cybersecurity. They should be way up there, and they're just not. So sometimes this company is complying with every regulation, and that's just not good enough in terms of cybersecurity. Sometimes it's arrogance. Sometimes it's laziness. Sometimes it's criminal actions on behalf of the founders, as we've seen with some of the bigger implosions. So I think it's every reason, and more can be done.
Yeah. Erica, let me ask you this. Compliance is expensive in the aggregate. When we talk
being hacked, but yes.
Crypto businesses, are they, many years ago I didn't think I'd be making this comparison. Are crypto businesses particularly more vulnerable than financial services firms, for example? There's not a week that goes by where I don't see something about some financial firm somewhere having been hacked, in that example. Are there similarities there for crypto firms?
There are. I mean, we see it every day pretty much in the British news that some retail company or some car company or some airport or whatever has been hacked. So everyone's getting hacked now. And the reality is the best hackers are way ahead of all law enforcement and way ahead of the corporate industry. And there's a bigger reason behind that. Hackers and criminal gangs share information with each other much more quickly than anyone else does. They're much more willing to share information. There's a lot of data available. There's a lot of reasons why they're ahead. But there has been a tendency to choose to target crypto companies, partly because of they're known for vulnerabilities, but partly also once they've got crypto out, it can be quite easy to launder crypto.
Yeah, Tara, I probably took away some time. I wanted to give you that question, though, as well. Please, what are your thoughts?
Yeah, so I think it's a really interesting one when we talk about whether crypto firms are more vulnerable. I think we hear about it a lot more in the press. Like, you have to go on any crypto media, go on any trad media, and you're going to see a news story pretty much every day about a hack, a scam, or an exploit. Now, there's a similar amount of crime that happens in the TradFi, the fiat world. It just doesn't make the news. It isn't as sexy. Often the numbers aren't quite as big, but it is still happening. And I think also the transparency of the blockchain makes us much more aware of crime. We can literally see on chain as a wallet is drained. Now, when we think of fiat crime, it's happening, behind a meeting door, a board meeting that's going on. We don't find out about those crimes. So I think we hear about crypto crime a lot more. There is, of course, though, still a lot of crypto crime. And as Erica says, there's a lot of reasons why that happens. Some of it is that we are a super innovative industry. We're building stuff that's never been built before, and with that comes gaps. Comes gaps when people, as you say, are lazy. It comes gaps when it's just brand new and you can't possibly see that's how the criminals are going to get in. So that definitely is an issue. I think also one thing which we're seeing, and we had the great panel before on AI, we're an industry that is breaking barriers, we're at the forefront of things. So our engineers are often the ones that are vibe coding, they're using AI, they're the ones that are trying to get fast to market, and so we might do our database structure with a vibe coding approach that then leaves the door open for hackers and criminals. But also, you just need to look at pretty much any smart contracts that are deployed on any blockchain in a given day to see massive vulnerabilities of people just not following best practice. And Erica mentioned that as well before. It's very easy to be a crypto criminal because there's a lot of people making shoddy products that have holes in, and there is no end of people who are attracted by the potential to become a crypto millionaire on the latest meme coin that's definitely going to go to the moon. And hackers take advantage of that, scammers take advantage of that.
Tara, let me stick with you for a moment. I want to build on that. One of the comparisons we've often heard between crypto asset firms and financial services firms, or broadly hacks in crypto versus hacks in global banking, is that global banking or fiat hacks are, on a dollar basis, on a value basis, far, far larger than crypto hacks. Is that true?
So there's a lot of very notable crypto hacks. You know, the Bybit hack was $1.5 billion. The Ronin Bridge was $650 million. Even when we think actually right back at Mt. Gox, one of the OG crypto exchanges, that was hacked for about 750,000 Bitcoins through 2011, 2014. That's now worth an incredible amount of money, that kind of value of Bitcoin. So we see huge numbers in crypto crime, and we see them on chain. The Bitfinex hack was later laundered several years later, and the amount of money there was in the billions as well. So in crypto, we're very accustomed to hacks and scams being hundreds of millions and billions. We do also have the lower level crime. You know, I have people on a weekly basis coming to me saying they've lost $1,000, £10,000, even small hundreds of pounds and dollars. So crypto is a very big spectrum when it comes to crime. But fiat money also works in millions and billions of dollars. I was actually looking up some numbers on this. I'll try and remember off the top of my head, because often we get this question of, oh, well, crypto is so bad, if only we could be like the traditional banks. Well, there's billions of dollars in fines levied to banks every year for the failings they have. And those fines are in tens and hundreds of millions as well. You have Capital One was fined, I think it was $80 million for cybersecurity, bad practice and risk management. You had Morgan Stanley, they were fined, I think it was $35 million for, again, bad cybersecurity practices. You've had collectively, I think it was 803 hours of outages for banking customers because banks failed in their duties to protect their services. So we often laud like fiat as being like, oh, if only we could be like fiat, but there are massive issues there, and the regulators are leveling tens of millions of dollars worth of fines alone. So under the hood, that's an awful lot of money being pilfered. Jeff White is an author in the space and the fintech space, so I'd really recommend you reading his stuff, but he follows North Korea, that Erica mentioned, and the Lazarus Group, and they have attacked crypto significantly, but they also have a long history of going after traditional financial institutions. They had this whole attack they did on a Bangladeshi bank and siphoned millions of dollars, I think it was hundreds of millions of dollars, through the SWIFT network. That is customer funds being pilfered out of there. Now, largely we don't hear about this kind of thing. Again, it doesn't tend to make the news in the media, like Sam Bankman-Fried with his crazy big hair, doing all of his crazy stuff and ending in jail. That hits the media, we hear about that, but there's an awful lot going on in the TradFi world, which is seeing customers lose money, it's seeing banks being heavily fined. So yes, we have the millions and billions that we talk about in crypto, but that is also the case in TradFi as well.
As some of my banking friends would say, the fines are just the cost of doing business, but that's a separate panel. Ilia, please weigh in on some of this. When we talk about hacks and we talk about scams, one of the things we very much try to focus on as crypto professionalizes is, what are the red flags that leaders in the space need to see? What are your thoughts about some of that?
So when we talk about cybersecurity, to be honest, I don't think that crypto is somewhat unique, because when we talk about banks, when we talk about healthcare, when we talk about government, they all have one big problem. they have no cybersecurity strategy. We all invest in artificial intelligence, hoping that it will finally save us and fix all the problems. It will not. We do not have a strategy. I mean, we have different teams doing different things without talking to each other. Obviously, we will not fix all the problems, because if we cannot see what our third parties are doing, for example, with our data, our third parties will be compromised sooner or later, and our data will be stolen. When we have shadow IT, when we have legacy systems that have never been patched for decades, and this happens in all industries, not just in crypto. And I'd probably even say crypto does fairly well because we don't have this legacy in many large financial institutions. We have some of the business critical systems that have been in place since like late 80s, and I'm not kidding, and they're still here, and they are just unmanageable, unpatchable, and we need to have a strategy. We need to have a holistic, comprehensive approach. We need to have policies. We need to have different people who will be accountable and empowered to address different tasks. Because when we do cyber as an ad hoc, annual, or exercise, it will always inevitably fail.
So, by the way, I clearly remember the late 80s. Thank you for that age reference. I feel much better now. But let's open this up to the group, Ilia, because you bring up some interesting parts. And one of the things we want to really talk about and focus on is, you talk about cybersecurity almost being part of the genetics of a company. I'd argue just about for all of us, cybersecurity needs to be a focus. But what are those blind spots? Let's get some specific in some of the things that we've seen that organizations and leaders in crypto need to be aware of. And I'm going to open that up to the entirety of the panel. But Ilia, let's start with you and give everyone else an opportunity as well.
So I think the very basic thing is to ensure that we have a holistic visibility of all our digital assets. And by assets, I mean our hardware, our software, our users, our accounts and cloud, everything. Once we have a holistic visibility, and it's not an easy exercise because we all have our personal phones that we use to chat with ChatGPT sharing customers' data. It is virtually impossible to trace this kind of, things. So we need to start with a holistic inventory of all assets, at least of 99% of them. Then we need to understand the risks and threats, because usually what we have is like, we will patch everything. Unfortunately, it is economically impractical. It's just impossible. So we need to understand what are the most relevant risks and threats, because cybercrime is a mature, well-organized industry. They're very shrewd, they're very intelligent, and they will always go after a low-hanging fruit. So if you erect a formidable cyber defense, but your suppliers are vulnerable, they will never hack you, they will hack your suppliers, but at the end of the day, you will suffer. So it is very important, and it may sound a little bit old school, but I've been personally leading hundreds of penetration tests, discovering thousands of different issues, vulnerabilities, and I saw that penetration testing reports are just piling somewhere, gathering the dust, and nobody really cares, because we don't have this strategy, we don't have processes, we don't have people, we don't have policies, and at the end of the day, CISO will say, oh, it's actually not my job, and CIO will say, wait, this is your job. And then we'll have somebody else who will intervene and to say, oh, actually, this is our supplier who will be accountable. And supplier will say, oh, we have a contract that disclaims any and all liability. So we play this ping pong. So I believe that we really need to have strategy and visibility across everything.
We often advise our colleagues that cybersecurity is in everyone's job function. Tara, I saw you nodding. I wanted you to weigh in on some of this as well, and I promise I will not bring up quantum computing and cryptography. But what are your thoughts?
Yeah, so people are your weakest link. They're your greatest asset in a business, but they are absolutely your weakest link. And that is every single person. When you look at the click-through rates of phishing emails, it is terrifying. There's so many anecdotal stories, and we had it in a previous place I worked where they sent out an email to people educating them on phishing. They followed up later that week with a phishing email, and over 20% of people clicked on it. Clicking on things is one of the most dangerous things you can do in crypto. It opens up your systems to hackers. It opens up the potential for malware, ransomware. So we have to train our people. It's training them in basic cybersecurity, because most people are actually really rubbish in that. It's training them in the red flags, specifically in crypto, and how hackers use certain language, certain things about FOMO, fear of missing out, urgency, all that kind of thing. That is a huge area that people are just not paying enough attention to. It's training their workforce to help them protect themselves. I also think another blind spot is complacency. And it comes from, in the crypto industry, we have this idea that as long as you've got your smart contract audited, oh, you're probably fine. Now, firstly, exactly as Ilia says, so many people get their smart contracts audited, and then they don't actually do the changes necessary, which is just a pointless waste of money and really expensive to get audited. But it also does not mean that you are safe. So a couple of years ago, probably in like 2022, at one of the big crypto conferences, one of the audit firms did a rooftop party, and you were only allowed in if you had been audited by another company and got hacked. It was a very busy rooftop party. Because just because you've got it audited does not mean you are somehow hack-proof and no one's going to get in. And so I think there is, sadly, a lot of complacency, which is, oh, I have my SOC 2 Type 2, I've done ISO, we've been audited, we are now immune. You have to assume that at some point a bad actor is either going to target you or they will hack you. You have to plan for that. You have to have those robust plans, as Ilia says, but you also have to practice it. You won't believe the number of organizations who have a playbook that is literally on a Google Drive that no one has ever read. And heaven forbid, if/when they get hacked, they are scrambling. What do we do for communication to clients and shareholders? What do we do about our systems? That is not the time you want to be reading through your playbook and your documentation around your hacking and your incident procedures for the first time. You want to be drilled in that so every arm of the business can go to work and try and mitigate the risks. So I think it's really not a crypto problem, but many of these firms are brand new. We've got people leading them who are young and inexperienced. They haven't gone through the cybersecurity kind of processes before, and you can be young, I'm only 30 odd, but you still have to have a sense of what you're doing, and you have to go through those policies, procedures, and run them out. So just because we're in the crypto industry, we can't think that code will save us, AI, as you say, will save us. We have to have those really good practices in place, and we have to practice those practices.
So to be clear, my private key is written on a piece of paper tucked in my wallet. Probably not the smartest approach.
So if you tell me where they are, I'll keep them really secure for you.
I'd have to be pretty drunk. Suzanne, let me pull you into this conversation. You and I go back a ways. Certainly a lot of the discussion today has been that comparative US versus UK, for example. Weigh in on some of that comparison. How do you see that playing out? We heard the 180 parallel about, let's call it UK, let's call it rest of world and US now broadly. What has changed? How do we compare crypto development in the US versus UK now? And again, keeping in mind regulation, cybersecurity, how that's developing. How have your perspectives changed?
Yeah, it's a wonderful question, and I'll touch on some of the things my colleagues up here have said as well. But one of the things, before I go to the US-UK thing, is that I think that a big risk in our industry is not having something that I would kind of call bi-coastal expertise in education, which is the traditional, long, well-trodden approaches that work, combined with the new let's move fast and break it sort of mentality. And so we need both, and we need both really, really to function super well at every business you're in, whether you hold crypto on your balance sheet or hold it for customers, or whether you're just a service provider that doesn't ever touch it, but you're in the crypto industry. We need both of those pieces of the story. And one of the things that's interesting about the UK, and it has brought concern at times from the industry here is that one of the main regulators here, the FCA, has two objectives, right? The primary objective and the secondary objective. And the primary objective is consumer protection and market, sort of that the markets work well. And it's very, very clear and loud that that is their primary objective. And then the secondary objective is competitiveness, to be able to be competitive on the global stage and bring businesses in. So there's two very clear objectives. We don't talk about it that clearly in the States at all. We don't talk so clearly about, we have these very clear, we've got to protect the consumer as primary. We have to protect the markets as primary. So those objectives are a really interesting thing to me in terms of the difference between our two jurisdictions. The US, I think you could infer by the prior administration that it was just all about consumer protection and all about market protection, but there wasn't some clear objective that was written out in a piece of paper that people could hold you to and how well you're doing it. And now things are changing more to like open up the economic competitiveness for the United States, open up the markets, open things up a bit more. I wanted to be able to ask some questions of the last panel, and maybe I'll throw it to you guys as well with the US-UK differences. By opening things back up, are we giving anything up? Are good enough guardrails still going to be in place in the US? Or are the guardrails in the right place? Are we throwing the baby out with the bathwater sometimes to bring crypto sort of more strongly into the US and free things up? It's truly just almost an academic question. I wonder what people think about that. Will it move too far? And so that's sort of a question. We see the move, but are we moving too far, too fast, or are we just moving to where it should have been all along? Yeah.
I mean, I'd love our colleagues to weigh in on some of that. I think one quick response to that is at least government in the United States is actually now having the conversation about guardrails.
Yeah.
About a year ago, it was, oh, you're in crypto, you must be a criminal.
Yeah.
So, I mean, our fellow panelists, please weigh in on that kind of perspective.
Yeah, so I can definitely add some thoughts on this one. So I think the challenge in the US has been this regulatory whiplash. You can't as a business plan if in 4 years the next administration could go from you are a criminal, crypto is evil, to we love crypto, do whatever you want. I think we see a big shift now where in the last administration it was, oh, you're a business doing crypto things. Oh, do you run infrastructure in the US? Can you And now we're getting requests of, oh, can we have our infrastructure in the US? When you look at jobs in the market, in whether you're an engineer, product person, customer success, the openings in the US now, there are so many more, and especially versus the UK. When we look at the UK, and caveat front, I do have quite negative views about how we're approaching crypto in the UK. We've been very, and I think someone said it before, meh. We talk a lot, we have the APPGs, we have consultations, we put out plans to start thinking about potential regulations in crypto, but we don't do a whole lot. And then when we do stuff, it's things like FinProm, which is that consumer protection angle you mentioned, and which has been, to be honest, an absolute disaster. Nowadays, as a UK internet user, I hit blocks all the time saying, sorry, we can't show this information or provide this service because you're in the UK. And it must be like how it feels to be a North Korean citizen or a Chinese citizen at times hitting all these blocks. It's super annoying, but it's because FinProm made firms worry about, oh, well, if I don't have a 10-page disclosure, they're going to come after me. So it's actually been really negative for consumers in the UK blocking us out. You can't even get on Binance's education page of what is Bitcoin because of FinProm. We've had firms leave the UK because of that. And then heaven forbid, in this country, you're a crypto business and you want a bank account. It is still an absolute... It's still an absolute nightmare to try and get a business bank account. If you handle crypto payments, good luck. Even if you're crypto adjacent, it's still super difficult. And so if the UK is genuinely serious about welcoming crypto businesses, growing the crypto industry, we need actual regulation. And someone said it before, we need good regulation. We don't just need any regulation, but we also need the services and the kind of ancillary support to support crypto businesses. And that's something, sadly, I'm 11 years in the space now, and the UK has done an awful lot of talking about crypto, but definitely not enough action. So hopefully we'll start to see much more positive action, and we won't follow the US's kind of previous trajectory where one parliament is super pro-crypto and the next one hates it.
Tara, just to follow up on that, a British colleague of mine had noted over a conference call that he was actually absolutely shocked that the SEC is moving faster than the FCA in the United States, but it'll be interesting to see how that plays out. Erica, please weigh in on this as well. I wanted to give you some airtime.
Yeah, to chip in on that, I think that two things. As Tara says, the UK has been incredibly unclear on regulation. All that that's done is ensure about 90% of companies move abroad to friendlier jurisdictions. All that means is you're taking the control out of this country if you're looking to do anything. And a factor specifically about crypto companies, so not limited to crypto companies, but that's a real feature of crypto companies, is they tend to operate remotely or sort of on a decentralized basis. You don't need to be based anywhere. So if you want to do something, you just go to a place where you're not going to be stopped doing that thing. It's, and I think there's a huge talk about, oh, regulation this, regulation that. I work in a law firm, and regulation in terms of crime is totally overrated. It's always been illegal to kill someone or to steal someone's iPhone. Well, guess what? You go out in London, you've pretty much got a 50% chance of getting your iPhone nicked. It's illegal to, I don't know, hire a hitman, steal from a shop, whatever. All of these things have long been illegal. It doesn't stop people doing them, here largely because they know law enforcement won't do anything, but also because there's always going to be some amount of crime. Likewise in crypto, there's always going to be crime, there's always going to be scams, there's always going to be hacks. There's been scams since time immemorial. There's always been crime. So we could say, well, it's illegal to do this, it's illegal to do that. Well, what good is that going to do? The reality is it's a global world, and if you've got the main or the best criminals coming and operating from places like North Korea or Russia or places where there's no chance of them having any repercussions whatsoever, saying this is illegal, that's illegal, isn't going to do anything at all. What we should be doing is educating people and really educating them on, this is what happens if you talk to a stranger. This is what happens if you try and send money to a stranger. This is what happens if you click on a link without checking what it is, and focusing on cybersecurity. So that's a sort of really long-winded way of saying, I don't think regulation is the answer at all here. The answer should be on increasing security, increasing checks, and increasing education to stop a lot of the human problems.
Erica, let me stay with you a little bit. I'd like us to peel back some layers of something we referenced a bit earlier. And for us, it's always this challenge around secure guardrails and investor protections, which arguably everyone here agrees with. I don't think any of us are crypto anarchists. I don't want to burn down the Fed or the global monetary system. But there really is this friction between working to be compliant, working to protect investors, and innovation. In a world where, arguably, innovation has never accelerated as fast as it is accelerating today. An old mentor of mine once said, the pace of innovation will never be as slow as it actually is today. How do we maintain innovation in the wake of how do we protect people using that innovation?
Yeah. So, it's a massive debate, and it goes into sort of a whole ethical and moral framework as well, because you've got the whole questions about, well, user privacy. Should you be allowed to send a private transaction, for example? And there's a huge debate, say, in crypto around, some people say, well, you shouldn't have mixers, you shouldn't have privacy coins. Everything should be public. Everybody should be able to know your name and see your name and have KYC for everything. Well, there's a few things around that. KYC just bluntly doesn't work. AI can get past it. There's entire ID mule marketplaces. If anyone wants to get past KYC, you can do it in an instant, and that's including past the banks and all the crypto companies as well. So there's that, but then there's a whole debate about privacy. So some people on the very pro-compliance people would say, well, why would you need privacy if you want to send a transaction? It should be public. Everybody should be able to see what's in your wallet. And, I'd be on there, well, no, maybe some people just want privacy. Maybe some people live in countries where it's not safe to send a transaction because they're being persecuted because they're a certain religion, ethnic minority, gay, whatever. So one of the real, I think, sort of benefits and opportunities that crypto offers is an ability to meet both of those things. You can have, I'm not going to go into the tech here, but you can have ways of ensuring, for example, that the person buying this thing using crypto is over 18, but without showing to the world exactly how old they are. So that there's ways that you can implement, I think, both things to have a relative best of both worlds. I would also argue that the whole over-compliance element is too focused on users giving up privacy without seeing all of the many reasons why privacy can be life-saving in so many circumstances.
Are you going to make us talk about zero-knowledge proofs, or do we do that over cocktails?
I was trying to sort of not go there because that's complicated and technical, and I'm conscious we've got 14 minutes left. I was trying to sort of touch on that without saying ZK fees.
Ilia, do you want to weigh in on some of this as well?
I'll probably just say that I don't think that new legislation will really help. Let me use an example of GDPR. And yes, EU is very proud and excited that they kind of pioneered. And we all know that in the EU, we have no more spam, no more phishing, no more data breaches. And we all feel extremely healthy because, we do a lot of exercise, because each time you open any website, you need to click, yes, I accept, and I confirm that I made a well-informed and freely given choice to accept cookies from your website. So we're clicking so many times a day that it kind of replaces our gym. So I don't think that we need more laws and regulations, to be honest, because now what I personally see as a lawyer, that in the EU we have far too many laws, and many people, including the Europeans, they complain about it, and we now see a very interesting trend that we'll probably revise GDPR, reducing some of the thresholds, adding some exemptions and exceptions. So I believe that now we really need to empower people by educating them, by bringing more clarity, what is legal, what is not, like do's and don'ts, but enacting one another law will unlikely help.
Ilia, I just want to make sure I clearly heard that. You said we have way too many laws. You just became my new best friend. Ilia, let me stick with you, and I want to expand this out to our other colleagues as well. Let's play make-believe. And the make-believe is, you've got a great idea. You're going to spin up a product and service that's going to trade Ilia token with an interface that will be fully compliant. You'll have a full-stocked team. You'll have lawyers. How do you begin the process of looking at that proposal, what you're planning to build, and saying, here's where I need to worry about regulation. Here's where I need expertise that tells me what to do here. I'm definitely going off script on this, by the way, just.
So I'd probably say that if we try to build a perfectly compliant product, we need to have technical people, we need to have legal people, and most importantly, we need to have business people. Because if we give too much power to lawyers, we will inevitably fail. It will be total disasters. Same with techies. So we really need to share power, and we need to bring different, diverse people to the table to make sure that we will hear all the concerns, because business will have a lot of great ideas. Lawyers will help to shape them, and techies will implement them. So I believe that starting with the comprehensive planning involving all the stakeholders you can is the best way to start, and not to realize later on, we don't have a backup and we don't have encryption. How comes?
Oh. Tara, weigh in on this, and I want to stitch one thing to that. An earlier panel, I forgot what the specific question was. It really became a matter of, we don't need to talk to lawyers. We don't need the regulators. We're technologists. Our argument is that's no longer the case.
Yeah, so this question is perfect because I've literally spent my career building crypto products. So borrowing, lending exchanges, cold storage trading, crypto compliance, institutional staking. So this is a challenge I have on a weekly basis. How do we build safe stuff, which is compliant? And actually, where I disagree maybe with a couple of the comments around regulation, is actually it's really useful to have regulation that says what's in and what's out. And a lot of the challenges we have at the moment is we have this like dangle that maybe we'll have regulation of something coming at some point in the future. That is a nightmare as a product person because you're trying to build products for unknown potential future laws. So when I talk about wanting more regulation and maybe where we're more aligned, is actually I'd love some clarification of this will be out of scope. You know, when we talk about DeFi, it's $151.5 billion of total lot value in DeFi at the moment. DeFi is outside of the purview of pretty much every regulatory and jurisdiction in the world right now, but they all say, oh, it's coming, maybe, you know, might come to Mika, who knows? That's a nightmare when we're trying to build stuff. So my job is a lot easier when I'm building products and services. I'm thinking, are we taking custody of the funds? Yes. Pain. No. Oh, happy days. Are we dealing with retail users? Pain. No. Great. Nice and simple. So there's a lot of things that actually make it pretty clear-cut. I build non-custodial institutional products. So my life is generally a lot easier. I've also built crypto compliance software, so that also makes my life a little bit easier because I know exactly how that works. And if you're processing transactions in any way, you're going to need that. Have a background in cryptography, so that's very helpful when we think of the back-end API side of things, which is actually pretty standard software build. So as you kind of get familiar with building crypto products, you get to know the areas that you need more attention, less attention, but it's the areas where there is no regulation, which is the most challenging, because you just don't know what regulation could come, and then suddenly the product you built, which was totally fine, now needs a 10-page disclaimer on it that messes your UI, means you have to turn a feature off.
Tara, go for it, Suzanne, please.
I just jumped in on
Please.
Tara brought up. That's really, really, really important. And I'm going to come at it from the angle of a trade association that's trying to advocate for good regulation and proper regulation and timely regulation and clear regulation. And one of the things we have been saying quite loudly over the last year here in the UK is regulators, you don't appear to understand how businesses work and how they make decisions and how they need to plan. And so if you're just thinking about regulation or it's coming one day, Tara can't build things. She can't plan to build things. And so that's kind of the role of a trade association in a way, is jump up and down and stomp our feet with the regulators and go, let us draw your attention to this and let us help you understand how businesses make decisions. And it's sort of a little plug for trade associations here, because sometimes the companies don't want their name attached to something a little too spicy directed at a regulator that could come back to haunt them, but we'll say the spicy things. But understanding how businesses work and how they plan and how they commercialize and how they make decisions is absolutely, I think, a lot of times really missing from regulators. I think the US does it better, and we do a lot of things worse, so let me make that super clear, but we do something really well over there, which is we have revolving doors between being a regulator and then the commercial side, and a regulator on the commercial side, and you go in and out, and we have secondments all the time, and we just need more of that here in the UK. In the meantime, trade associations will try to help with that.
For the record, you can pitch trade associations all day long if you like. I wanted to, we're approaching almost time. We've got a little bit of time. Tara, given the background of what you said, let me ask a provocative question, and Erica, I'd love your perspectives on this, which is, given all of that, then why don't all companies just operate like financial services companies?
Because I don't think financial services companies necessarily have it right.
Erica, is she wrong?
I think there's, sorry?
No, go.
I think there's, there's call for both. You've got some of the big traditional financial service companies who do a great thing, who have security and reliability, and if you're going to put money in somewhere, you want that money to be safe and secure, and maybe it doesn't get maximum return, but it's safe. And one of the real benefits of crypto companies is they can innovate, they can be faster. And that isn't just a crypto thing, that's like a startup thing that you want both, I think. You want the sort of the safe, secure, not going to lose your money, and then you want the space for fast innovation. Maybe something will go wrong, but maybe it will go really, really well, and maybe we'll try something new that does something really good and makes changes.
So both are possible.
I think so.
Yeah. How important is...
I hope so.
Yeah. How important are, we keep hearing the word disclosures in the States now. How important are disclosures to the discourse between regulators and innovators, and ultimately who those innovators' clients will be? And what do those disclosures look like? And the reason I bring this up, coming out of financial services, I have so many colleagues that do options trading, for example, and there are these disclosures in the United States that you're required in these 2-point font, 10-page documents that no one reads. Why are we talking about disclosures now?
So I think it's because all too often we're trying to fit crypto into banking regulation, and we just cookie cutter it across. And it doesn't necessarily work for TradFi particularly well, and it doesn't work for crypto, because crypto is different tech, different use cases, just it works differently. And so there are some things which are fantastic to borrow across, and other things that just fundamentally don't make sense. I think disclosures are a great example of that. I don't think probably a single person in this room has ever read the terms and conditions of any software they've ever signed. Okay, maybe one person. But yet we have it. On every new purchase we make, there's like those 1,000 pages of stuff that no one ever reads, you sign and recline. Disclosures are the classic thing where it's like, oh, well, if we give people all of the information, then at least we'll be protected. And that's what it is. It's the companies trying to protect themselves. It isn't actually about protecting consumers, sadly, because if we want to protect consumers, as Erica was saying before, it's about education. It's not about giving them a 10-page disclaimer. It's about saying, here are the actual risks involved. Some of the crypto exchanges actually do a fairly good job of this in that they have pretty lightweight disclaimers and disclosures, but they also have learning portals about the actual risks. Now, I'm not saying they have it 100% right, because just whacking on, be prepared to lose all your money, isn't necessarily the greatest protection. But I think we have to get past this idea that if we just copy and paste TradFi regulation into crypto, it means crypto is somehow now safe. I think we have to do a much better job of tailoring our crypto approach and what's going to work well in crypto specifically.
We've only got a couple of minutes left, but we could keep going. I kind of want to round out this conversation. Word you said, Tara, and I want to give it to our colleagues as well. You mentioned the word education. And one of the challenges that we've seen for many years in this space has been, how do you educate regulators who thought you're all illicit actors? How do we educate legislators, candidly? How do we educate customers? Suzanne, let me start with you. I mean, given the work you do, how do you approach that education idea? And where do we point people to learn about some of the stuff that's happening?
Well, I'm going to, again, selfishly promote things like these kinds of conferences and trade associations. So I think showing up at these things is really, really, really important, not just from what you learn from people on the panel, but from networking with people over coffee and lunch. Like, these are really important places to do that. I learn something new every time I attend one of these. Even if I'm up here for a little bit, I learn so much from the prep calls, whatever. So I think these kinds of things make a huge, huge difference, and trade associations do as well. I think you guys can add other things that you think, but trade associations are constantly doing educational events, not just for the members, but for the industry. And then for regulators and policymakers, we spend a lot of time doing that. So.
What do I owe you for the second trade association plug?
I'm so sorry.
What do I owe you for the second trade association plug? We can talk about it over cocktails.
Over there? Yeah.
Ilia, your thoughts, please.
So I think that participation in conferences and different industry groups is extremely important, because you may do everything online. We have a lot of schools that offer training, diplomas, education online. That's not bad. In my experience, it is oftentimes a challenge to find a high-quality skill that will offer you something valuable and actionable, something that you may use in practice. I also believe that now with AI, we have so much noise, like YouTube video, how to become software engineer in 15 minutes. Then you say, oh, there is another, how to become a software engineer in 5 minutes. And you're like, wow. Do you have a video how to become an expert in software? In just 1 minute, I'll watch it and I'll get my certificate. So I believe that talking to people, talking to your colleagues, talking to your peers is the best way to learn practical, useful insights.
Tara?
Yeah, I agree. You're so right, though. There's so much kind of AI slop out there. There's so many experts and calls in the space. But there are actually lots of really genuinely great people that know what they're talking about. So I think it's really important to find those, read them, keep yourself updated. There's lots of amazing books in the space. Erica has written one, for instance, on crypto crime. And there's lots of fantastic authors out there who are at the forefront of what's evolving in the space, whether it's crime, whether it's regulation. So keeping abreast of that is so important. And I think specifically with regulators, governments, etc., I spent a lot of my time educating them. And when I got into the space, 11 years back, you had to read white papers. And you had to spend your time on Bitcoin Talk forum, chatting to the core devs. It's never been easier to find access to crypto information in the space. So it is about finding it, using it, and making sure that you are kind of spreading good information and finding the people to follow.
I'm just grateful none of us said X. Erica, you want to wrap us up? And cite the book, please.
Tara also wrote a book, the Bitcoin ABC book, which is the perfect answer to this question. I think there's two things. There's got to be a mutual desire to learn, but also a mutual desire to see the benefits of the other, and that goes for crypto companies and regulators. There's advantages if they work together, which they don't always see. But I think the other thing is, these topics can be so complicated, and I know that making some of these topics simple is the hardest thing to do. But I've been in rooms where you've got PhDs of cryptography try and explain really complicated things to regulators and lawyers and investors and other, and nobody understands anything, and it's clear on their faces that nobody understands anything. And nobody really wants to ask, or they're too scared to ask, or they lose interest. And I think that's a failing. The best thing that could be done, in my opinion, is maybe not get the cryptography PhD in to do the explaining. Maybe get somebody in who can just break it down into really sort of simple, easy, and not to idiot-proof it, just to sort of translate things into words that people can understand if they haven't sort of deeply studied it. I mean, if you're trying to explain, I don't know, the history of volcanoes or whatever to me, like, I'm probably not going to understand it. I've never studied it before. I've never looked into it before. But if you can make it easy enough that I can understand it, then I'll probably understand why it's good to know about these things, or why it's good to stop these things, or whatever. That's probably a bad example. But
yeah, there's a lot of stuff happening, and it's important to be plugged in. I think the answer is also convince Rachel and Rob to do another one of these events next year. But with that, you have cocktails coming up shortly, and please join me in thanking our panelists.